Hi, I'm Luke Norman. I'm the Executive Chair at US Gold Corp. We're a NASDAQ listed company, primarily NASDAQ, very tight share structure, 14 million shares outstanding and counting. We have a development stage project in Cheyenne, Wyoming. It's a copper gold porphyry system. It's fully permitted and we are now moving towards production.
I like that. Tight share structure and parameters.
Yeah.
It's already a good start.
It's a rarity. Both are rarities. Yeah.
Hey, like, I think we caught about 18 months ago now. So I'm just really trying to work out what's changed. How are you getting on the ground? So maybe just remind people what it is that you've got, first of all, and I'll take it from there.
Right. So 18 months ago, we were still a bit of a gamble, I guess, because the big question mark around CK, which is our project just outside of Wyoming, was can we permit it? I was even a bit of a naysayer about 3-4 years ago. The project sits very close to a state park. It had all the earmarks of one of those projects that was going to be a bit of a challenge. And fast forward to now, we received permits end of November last year.
For what? Permitted for what?
Permit to mine, fully permitted to mine. So in the space of 4 years, we took a science project exploration asset, turned it into a reserve, a pre-feasibility reserve, and then took it through the permit process in Wyoming. Now, a little caveat or sidebar that everyone should understand is we were fortunate enough to get our permits because we are in Wyoming. So on state ground, no federal nexuses. At the time, it was very much a different government in the US. So we're I don't know, somehow light years ahead of our peer group in a very short period of time.
Yeah, I think Wyoming, obviously we know them from the uranium guys who are having quite a nice time, good place to do business. Recent executive orders also kind of help for you guys just a little bit. How do you feel about that?
It's ironic actually that's come about, because we went through the process again with a government that was not as motivated to work towards getting mining up and running, to all of a sudden having this new administration that is very pro, I think, just not pro mining. I think they're just pro business and getting harnessing the natural resources. So how we got through the process was through a more arduous step, but now here we are. Both copper and gold are critical minerals in the US now. Through this new administration, and they're trying to help other projects be sped up. I won't say fast track, because I still think they're cognizant of environmental issues and different things that are going to occur anyway with the project anywhere in the world. But with us already haven't gone through all of that. Even federal money may be on the table for us.
Well, that's the interesting thing about this project. So maybe we should just set up and talk about the scale of the opportunity and the breakdown between copper and gold, and I'll tell you why in a second.
Yeah. So Copper King is not what one would consider a large development project by any stretch of the imagination. However, it's definitely aside from appears to be what's going to be a very highly profitable opportunity, it's got some real size potential to it. What we had to focus in on was I should have mentioned 1.5 million ounce reserve. The breakdown is about roughly 70% of the economics is gold, 30% of the economics is copper.
Right. Using spot price today?
Using spot price today.
Right.
Not using spot price today.
Right.
Using the benchmarks that we valued the project at in our February of this year pre-feasibility, $2,100 gold, $4.10 copper.
Okay.
So
you're in the money.
We're in the money.
We're good. Okay.
And with those benchmarks, you're a $940 AISC. So the economics of the project are robust, but people get confused. They look at 1.5 million ounces and they go, oh, it's a small mine, a small opportunity. Well, a little brief history lesson is what we actually did, how we went about this project, is we needed to establish a framework that would be of interest to the public markets, but we didn't want to blow our proverbial brains out just exploring and discovering a reserve or deposit that would never go into production. There was a big question mark over whether we could permit the project. So once we got to a certain point in size, which was 100,000 ounces, minimum 10 years production, we drew the line. So we have a pit shell that is completely drill constrained, and I don't want to get too technical,
that's fine.
but there's a lot of mineralization beyond what exists in our reserve. Because we're US listed, we operate under SK 1300, not NI 43101, so we couldn't bring in inferred resources or any of that. So our reserve is our reserve, but the mineral deposit stands well beyond the margins. So ultimately, it's a larger, richer ore body, but as it stands right now.
No, it's interesting. I think there's a few companies that we are talking to us, and they've kind of changed their model to adapt to what the market conditions are. And the market is not rewarding exploration.
Nope.
Right?
Yep.
It is rewarding near-term revenue stories. So I've no problem with the starter size is not that small.
No.
100,000 ounces a year for 10 years, I'm happy. Believe me. And it's a question of, say, in terms of understanding the economics around that, what do we know today?
Well, so what we know through our pre-feasibility work is a very low capex. So the building cost, development of the mine, of course, is extremely low. We get a lot of questions around our capex numbers from industry pros who are like, hey, I do not see this. It's inconceivable that you could build a plant at this cost. What they fail to recognize is we're 20 miles outside of a major resource hub, which is Cheyenne, Wyoming.
Yeah.
We're 2 miles from the I-80 corridor, which is highway, rail infrastructure. We have power and water to the project. We have paved roads. So the long story short is people go home at night. When we need an electrical engineer or a plumbing contractor, they come in, they'll do their 2-3 days of work required to get us to a point. They leave, they go back to their other job, whatever else they're working on, they come in and out. So it's in and out flow, versus having man camps, backup storage equipment, all the other just unimaginable variables that would go with building something in the Andes, for example.
Yeah.
So it just changes the whole specter of the project. It's like building, constructing a commercial property somewhere close to any major city.
Right. So when do you kind of nail down those numbers? Where
so
do we
we're
go from
doing
here?
So we're moving to full bankable feasibilities right now. But that will be a very, very concise document. We're going to have contracts on that electrical engineering, on the groundwork to lay our foundations for our crushers and all the different pieces and parts of this project.
Yeah.
We're going to have hard quotes from contractors who established businessmen 20 miles away in Cheyenne. So it really changes that whole scope of people expect these projects to grossly overrun and cost. If you're moving all your material in by rail and then truck over roads that you're having to establish somewhere in the bush in Alaska, I'm sure it becomes just a logistical cost nightmare.
Yeah.
For us, we're right on the major grid, as it were.
Okay, so let's look at how the project moves from where it is to where you need it to be with the money that you've got. So where are we with the money today? Right.
So I catch myself saying this, and it sometimes makes sense, sometimes doesn't. But we have a strong treasury, so we have about 15 million US in treasury. Again, a very tight share structure. Less than that in shares, 14 and change.
Yeah.
But we don't really need any more equity dilution. What we will need to do is obviously raise somewhere in the realm of $300 million to put this into production. Mm-hmm. But that money's not going to come out of our equity coffers. We're very aligned with our shareholder base. We all own stock in the company. The last thing we want is this big equity blowout. So already, given that we're going to be producing a concentrate, which I did not mention, but it's going to be a concentrate, there's high demand, as I'm sure you know, for concentrates globally right now. So all the off-takers are approaching us already, pre-final feasibility, offering us term sheets, which are predominantly debt.
Yeah.
I think the old expectation of us having to come up with 40% of this in equity, so we can take on 60% in debt, is historic. It's archaic.
Yeah.
We also have access and opportunity to federal and state money by way of loans and grants. So we got a lot of exploring to do in terms of how we're going to build this and how we're not going to blow up our share structure.
Yeah.
And the latter is not an option.
It's interesting, actually. I think there's a company called Troilus just down the road here from us. They've used their copper component to effectively fund their gold development, gold production, I should say, to be really clear about that one, because people want copper. Now, this is a smaller project, but do you think the mentality is the same? Because, like you say, conventional funding is just gone. You need to think creatively, clearly, without, whether it's a death spiral type mentality back in the 2010s, right? So you think that world is out there, available to you?
Oh, it's more than so. In fact, you'll catch me in many instances and on tape saying that we're going to find a creative way to finance this company. I'm not just throwing word salad at people. That is what's going to happen with this project. Right. There's so much interest in that concentrate. Again, from its the cleanliness of the concentrate, which is hard to explain. We won't get into it right now, but the flux characteristics of it actually goes in to blend with other concentrates and helps generate its own heat. A wonderful concentrate that comes out of the project. But beyond that, again, we're in a state that the state of Wyoming has precedents where they will put up to 50% of capex by way of municipal bonding. There is federal grant money and loan money out there right now because both copper and gold are critical minerals now in the US. So we're just walking into a pretty unique situation here where one of the only permitted projects in North America in a junior's hands that's ready to go. There's a lineup of capital.
Right. And what's the end game here? What am I buying into? Because you've got the advanced development going on. You're talking to me about, you're thinking already about the kind of financing solutions in an anti-dilutory manner.
Yeah.
Execution on build. That's the killer for companies. What are you doing about it?
George B., for starters, our CEO, of course, has built the largest gold mines on the planet. He cut his teeth amongst other projects that he worked on in the past, but at a prime old age of 26 or 27, he kickstarted Goldstrike for Barrick, which was their formative asset. He's then gone on to build assets all the way through South America, well high into the Andes. The gentleman knows how to dig a hole and extract gold. His contact base is remarkable. His Rolodex, as we'd say in the old days, right? So he has an ability to, follow through on his expectations, holds himself accountable, and our team, we all hold ourselves accountable. So we look at this as not, again, just some sort of, hey, let's go raise some money and see if we can build it for X. Let's button this down and let's get it done.
So how big's the team at the moment? If you talk entrepreneurially, the team, when we've sort of engaged with it feels very agile.
Yep.
It feels like a small team, is it?
Yeah, it is.
Yeah.
So on the actual executive of the company, we have George, the CEO, me, executive chairman. I'm more capital markets, George is engineering, and he and I align in capital markets work. We have a chief financial officer and we have a chief geologist. Then everyone else is contract or consultant to the company. But then there's a myriad of those, right? We have a huge accompaniment. But that's another cost-saving benefit for all of us as investors. Is it's like a special teams. They'll come in when we need our metallurgists. Right, they're on payroll doing metallurgy. When we're not dealing with metallurgy, they're working on something else. Okay,
talk to me, which I have no problem with. I think I just need to understand it, every company is different, right?
Yeah.
I guess what I'm trying to think about now is scale. Okay.
Yeah.
You said, look, it's a perfectly reasonable starter project. Perfectly reasonable starter.
Or a massive
throws
bolt-on,
off a bunch of money.
Yep.
You will explain to us at some point. But this kind of scalability comes through exploration, right? So, and I know you've got cash at the moment, but you want to be careful about how you execute that until you know how you're funding the capex. So when does the expansion bit begin?
So we're expecting this is all going to kind of happen rapidly.
Yeah.
So the engineering, the drilling, all that was done, in terms of, making sure that we're not building our site over additional, potential ore in the future, or everything that we're working on. That's all been done. Our final feasibility is not essentially, it is actually a desktop undertaking.
Right.
We're bringing in a mine manager soon that's going to actually go and deal face-to-face now with the contractors as we complete our final feasibility. Now, we're not talking years out, we're talking Q4, we will have a final feasibility. Off the back of that, that's our runway to actually raise the debt, put this into production. These things occur very quickly around our company. And I implore anyone who's listening today, maybe take a look at some of our press releases online. From August of 2020 to November of 2024, we established an economic framework, pre-feasibility, permitted, as well as industrial sightings permits. Dealing with state, social licensing, everything. That was a 4-year process, or under a 4-year process.
Yeah.
So now, between November and what's going to be November of in that 12-month spatial period, we are going to go through full feasibility and probably have offers on the table for full debt funding.
Okay, that'd be nice.
Yeah.
Just full circle around to permits again. So permitted to mine.
Yes.
You're going to need to get a few more permits in place to actually extract and process or do concentrate?
Nope.
You're done?
We're done.
Nice.
We're done, yep. Air quality, wastewater management, we could walk through the list of them. The Department of Environmental Qualities in Cheyenne, Wyoming, their office is 2 blocks away from our corporate offices. It was a very kind of boots on ground, face-to-face type undertaking. If there's a typo or an error, it didn't all of a sudden have to go to the bottom of the list, bottom of the stack.
Yeah.
It was a really remarkable process, as stringent as any federal agency.
Right.
They care about their environment. They don't want us going in there and poisoning waterways, all the different things.
That's an awesome state to be in. Absolutely awesome state to be in. In terms of, you mentioned sort of First Nations.
None. We're on state ground.
So all clear and...
It was all... Currently, it has been leased to a local ranch holder as grazing land.
Right. Under
state regulations, if there's a better use in terms of it generates more income or taxation or royalty, it's to be used for that. It's remarkably and wonderfully kindergarten through grade 12 school board that will receive the royalties from our project. So it's putting textbooks on tables and computers in schools. So it's kind of fun. And the great community support. There was no official objection tendered anywhere through the process, through the multiple permits that we did, which is all publicly disclosed.
And have you got a sense of where you get the people from to actually work there, and will they be skilled, or do they need to be trained?
No, so it's a complete hub for the resource sector. There's a ton of what we refer to as heavy iron, but machinery in the state of Wyoming, because of massive amounts of coal, trona, other forms of natural resources already being exploited. Yeah. We're the first hard rock mine in 100 years, but all that heavy iron is sitting there ready to go. It's skilled manufacturers all the way through to steel fabrication. People are worried about, we won't even go down this pathway, but about the tariff situation in the US. We're dealing with steel fabricators right there in Wyoming, right in Cheyenne. Yeah. Our electrical engineers, everyone is coming. They go home at night and sleep in their own beds. It's just a fortunate location.
US company with US projects for the US.
I've got a different way of phrasing it. The right stuff in the right place at the right time.
We'll argue about that. But no, it's a good time to be working in the US for sure. You're getting that support from the government. Yeah. It's the right time, I think, for metals. Yep. And obviously, as you say, two of the most popular ones there, copper and gold.
Copper and gold.
Well, I appreciate your time for coming in, Luke. And I know you're busy running around this place. Everyone wants copper projects.
I almost take this as a break, actually. I enjoy taking it.
Glad you do.
Tell the story. I didn't have to flip pages.
We'll see you soon.
Please, thank you.